Hi, everyone. Thanks for tuning in to Groundbreakers. On this podcast, we interview early stage founders and real estate investors to hear their stories that will let them to have success in their career and their journey from zero to one. I'm joined today by Georgy Marrero, founder of Equis Capital. After a high flying career in big tech, he was building AI at Amazon, Meta. Georgy made a dramatic pivot, walking away from an $800,000 salary to pursue financial freedom through alternative investments. Today, he manages over 28 million in a real estate portfolio and helps other tech professionals achieve long-term wealth through passive, tax-efficient real estate investments. Georgie, I can't tell you how excited I am to have you on the show. Thank you for coming on with Groundbreakers.
Thank you, Domingo. I appreciate it. I'm glad to be here.
Yeah. So to kick things off, pretty incredible background. I know we were chatting a bit before this episode of just how much you and I have in common, even outside of this,
hmm
um, which is amazing. How did you even get here? How did you go from tech, from software, from you had a pretty tough upbringing. I remember you were sharing with me how you got to where you're at, and now you're managing this pretty large portfolio. You're helping other people. You were a founder. Walk us through your story.
Yeah. So one of the things that we connected with was the fact that we're Latinos, and I grew up in the Dominican Republic, and I want to say that that's where everything started. Since a very young age, I was 7 years old when my dad bought me a computer, and I started being on the internet since I was 8. Thanks to my mom for putting dial-up internet back then. I started coding when I was 10 years old, and I never, I learned on my own, never had a mentor really for the coding space. But I had the internet and I started looking for knowledge. Um, by 14, I had multiple, like a dozen pieces of software out there with users using them, but I really didn't know what I was doing. At 17, I was still in the Dominican Republic and I had sort of like a decision to make. Do I continue here in the Dominican Republic or do I move to the United States? I was fortunate enough that I had the US passport and I could, go to the US. So that was the time that I read two books. One of them was Think and Grow Rich, and the other one was Rich Dad Poor Dad. And I want to say that the first one taught me that really anything you want to do is possible. And the second one taught me that real estate was the way for freedom. And it really changed my perspective around money and time. Now, me being a very technical person and wanted to really scratch that itch, I kind of tucked away the rich dad, poor dad. And I said, I know I will do real estate, but maybe I will tackle the tech side of things first because that's my calling at the moment. So during that time, I sold everything that I had. I just turned 18 and I said no to all the scholarships that I had for universities in the Dominican Republic. And I moved to California and I moved to stay at my aunt's house. I was sleeping on her couch and I only had $1,000 at the time. So very hard decision to make, but I was just, I had a dream. And shortly after, when I was 19, I got a software engineering job in Southern California, and I was making six figures already. Um, then I get accepted to UC Berkeley, which was the top university that I wanted to go to for the computer science program. I remember I tell my manager at the time that I'm going to Berkeley, and he offered to double, nearly double my salary. I talked to one of the guys, one of the most senior guys, somebody that had been at all the FANG companies. What should I do? And he tells me that I should just go because this, there's more for me out there. So I politely declined that, and that manager is still one of my great friends until now. He calls me every 2-3 months, and we talk about everything in life. And I go to Berkeley. I do the whole AI thing. I only take graduate level courses. I do computer vision research. I start a startup. We go to a YC Y Combinator hackathon, and we get to meet Sam Altman. So we do all of it, all of it. We try it out, and then eventually a lot of things happen, and I joined Meta as a full-time employee. At the time was Facebook. But the first thing I do, I pick up again the book Rich Dad Poor Dad, and I remember, right? I remember this is going to be temporary. I'm going to be here for a little bit. So with my sign-on bonus, the first thing I do is I buy a property, and this property was in it was a limited partner position for um one of the deals that I found at the time. Somebody else that was working at Meta, and I tried that out, and I make some money. When I get it back, I invest on a property for my grandmother at the time, and from there, a lot of things have changed. But that was my introduction. I remembered why I was doing everything, and that real estate was the way for me to probably get into this tech world, but also carve my exit out.
That's incredible. I don't think there's that many people that would leave Meta, especially when you're making probably a good amount of money. It's a cushy job. I mean, Meta, I've heard, they work harder than people at Google. So there's that. But um, like, not that people will leave that life to then go into like real estate entrepreneurship, and like, working with different companies on the side. Can you share with me like what your decision making behind that was, and like how many deals you had done either personally or like with other folks up until that point, and kind of that journey?
Yeah, no, that's a great question, and it definitely wasn't an easy decision. But I don't think anything worth in life is really easy. It's always very hard. After those investments, the one as a limited partner that really showed me one way to do real estate, and then I became an operator. So I started buying houses and trying all the different business plans in real estate. So flipping or building to rent or building to sell, Airbnbs, you know. But I was doing it on the side. So I used to work as a machine learning engineer, working on augmented reality and generative AI. And then on the side, I used to call it exercising the other side of my brain and doing real estate. It was more um, social and personal, right, than being in the computer coding. And I always thought there was a synergy between the two activities, right? The analytical part helped me on the real estate, and then the social part helped me in corporate. At one point, I felt stuck just doing the same, the smaller deals, and I took a break about 6 to 12 months to learn commercial real estate. And that was eye opening because at the time I had about 12 deals that I have done on the smaller space, small multifamilies, and I was still working full time. So this was just a part time gig.
Were you an
Then
LP in these deals, or were you also coming out as a co-GP?
before that, I only did one LP, which was that first one, and the very brief deal just to, I had some money. I wanted to place it somewhere and learn from somebody else. That's really what allowed me to do the operator. But then all of the next ones, it was either solo or joint venture, not really a syndication model. But once I took it seriously, meaning I learned the commercial real estate, I knew what I was supposed to be doing, but I learned the game and I started investing in those deals. Then I was a hybrid, limited partner and a general partner in all the deals. So I had skin in the game, but I also operated the deals. And it didn't take much. It was about 2 years from there that I found a way to leave the job and just do other things, newer things, better things.
That's crazy. That size of portfolio is pretty impressive in the short period of time that you were in Meta. Like, you were there, but also like that is a demanding job. And they were also scaling to like 12 properties. That's incredible. And so was this all through Equis Capital? And like this is for you for now, like getting into these JV deals with different folks? Or what was the start of Equis Capital? And what gave you that motivation to be like, you know what? I've done all these deals up until this point. Now I'm ready to take the next step. And, that is me not at Meta. And this is me now actually doing this full time and tackling this.
Yeah. So Equis Capital was born after understanding that if I kept this as a side hustle, it was going to have side hustle type returns. But if I treated it as something bigger than a side hustle, then it could have bigger returns. And I noticed that what I was going through, there's a lot of people that probably don't feel the pain point, but because they're comfortable in their jobs and they're probably optimizing for vanity metrics. I was one of that. I thought I wasn't going to be. I told myself before joining I wasn't going to do that. But at some point, 100,000 more, 100,000 more, 100,000 more. But it took me stepping back and understanding that's useless if it doesn't really fuel your real desires and it doesn't align with your values. I was a kid that had a lot of very big dreams, and I always asked myself, what's the next thing? What's a bigger thing that I can do, or the next thing that I should do? And being at Meta, I realized that I wasn't the only one. All these people that got there, they probably went to a great university. They were overachievers when they were kids. A lot of them were I doubt that a lot of them were 15 years old saying my end game is just being in this corporation. It was always, I want to build something. I'm a builder. I'm a tinkerer. But corporate, this is my experience, it can manipulate a bit your your dreams. You can forget about them if you stay complacent. So I realized that a lot of people from all levels, the newcomers, the junior engineers, all the way to the directors, they felt that they were made for more. So I made Equis Capital be about that message. Remember your dreams when you were a kid and remember that they're possible. More or less the Think and Grow Rich, uh, what I learned from the book. And then the vehicle of my choice has been real estate because now I understand it at a deeper level. And I understand that by holding these alternative assets, you're able to achieve that freedom today rather than depending on selling your assets, your securities or stocks, and having to time the market for whether it's up or down or whether you have to wait another 5 years or something like that. But it's very different with real estate because we invest on cash flow, something that is tangible today that you can use today to pursue those dreams that you have.
No, absolutely. I'm curious for you. So did you launch Equis Capital then when you were still at Meta? And I totally relate to your story. Like I used to be like prior to this, I was at Google. I was there for 5 years. I was always trying to be a part of like the real estate investment club that's an employee there started. And it was like you'd meet every month and people would chat about it. So I actually think like the pain points that you're addressing for folks like probably hits really deep for a lot of people that are there. Cause like I know at least it did for me. And both you and I quit our jobs to now pursue something else. So like we ended up taking that step, but not everyone has that, privilege or can. And so, they need that income and want to pursue it in other trajectories like real estate. So did you start Equis Capital then when you were still at Meta and then you leverage some of those communities or was this post you leaving?
This was during my time at Meta. I had started it.
Got it. No, makes a ton of sense. And I think a lot of people in that community would probably find this incredibly valuable. And now like your investor archetype is, people in tech. And a lot of those people do have, very high incomes that they're looking to, invest in something passive like real estate. So what is a typical message you tell folks? Because I know a lot of people that listen to this podcast are also in tech, like come from similar backgrounds to you and I. Like what do you typically tell those folks and what is some of their hesitations that you find when you're sharing and educating them?
Yeah. I when I talk to people in tech, sometimes there is hesitation about the vehicle itself. But so there's a conversation, an extensive conversation about what real estate really means. I even get people that think I'm trying to recruit them to be a broker, just which is completely different to what we actually do. And residential real estate is not the same as commercial real estate. The structures are completely different. So I typically talk more about what they've been doing up to now, what has been working and what hasn't been working. And typically cash flow and taxes are the pain points today because not a lot of asset classes can help with that consistently. There's a lot of misunderstanding on the risk levels of real estate, which is another conversation that we usually get into, and how like all the ways that you can have downside protection on with this vehicle that you wouldn't have otherwise with other asset classes.
No, it makes a lot of sense. So much of people's net worths are tied to the stock of the company they're working at. And even though, you know, you have a high probability that it's probably going to be there, you know, Trump tariffs, everything dropped like 20, 25%. Like that's 25% of your net worth going down over like a 2 week period, 3 week period. That is incredibly scary.
Yeah. It has affected a lot of people that had a timeline on when they could leave their jobs, right? And now they're saying it's going to take us 5 or 7 more years.
Oh, yeah. Do you feel like that has helped your narrative of why real estate is an even better asset class now? Or like, how has that changed your messaging?
I definitely got a lot of text messages from people at Meta when that happened. A lot of messages. I also got messages from the more risk averse people that perhaps were on home base and they had soft committed saying, "Oh, I'm not really sure if I should do this." So I've had it both ways.
Yep. No, I'm with you there. I think everyone got scared. Everyone saw, you know, their bank account net worth go down in a very quick period of time. So it led to a lot of uncertainty. I do think that ultimately real estate will be better positioned because of it. I think the market's been too free for too long in the sense of like it's going up 10% every year. So like, why would I want to do a syndication? Well, it's not going to be like that now, potentially moving forward. So
Right. Yeah. It the real estate play is I've never seen real estate as stocks versus real estate. I do believe that stocks should be the foundation and the base because of the liquidity aspect. But I don't agree that it should be your only strategy, especially if you're trying to have an asset that you can enjoy today, right? Because time is not given. And if your ability to enjoy your time is dependent on all of these volatility, fluctuation, and things that you have zero control over, then you should probably rethink your strategy. I do think that real estate is about reclaiming that control over your own strategy and having an asset, creating true diversification just beyond the S&P 500 because when the stock market goes down everything goes down. There's also high correlation with Bitcoin and other uh, very liquid assets. But when you add real estate, you have this different, uh, this true diversification.
no, absolutely. And in real estate, typically a few like either quarters behind the market. So if everything's going down, like at least your real estate has stayed
Yeah,
somewhat
very
similarly.
lagging. Yeah,
Yep.
so you have
Yep.
you have time to react.
Exactly right. Curious for you though, like, you know, you're now doing this full time. You've done many deals in a pretty short period of time. You've built an investor base of folks that are all in tech, so high net worth, and they're, you know, willing to commit capital. What is the focus for you? Like, what are the different types of deals that you tend to focus on? Do you have a certain asset class in mind within real estate? And is there a typical buy box or like certain partners that you always work with? Like, share more.
Yeah. So I started with multifamily. Typically, it's easy to understand. Then I moved into light industrial, self storage, and lately I have been doing more land development. I personally like the land development because you have multiple exit strategies. You could potentially buy the land and flip it if you decide to, especially when you're getting a lot of leads or you're getting things at 50% or 70% discount. You could flip it and just exit. Or you could go ahead and do all the horizontal work, which just means clearing the lot, making the streets, putting the infrastructure, getting environmental permits, etc., and just selling there to a big developer or multiple developers. That's the second exit strategy. Or you couldn't go and develop and then sell. During the development, you can sell at a discount, but at least you exited your position. Or you can just build outright and then sell to retail. Or you can go ahead and refinance and rent it out and then sell it or keep it. So it's like 6 different exit strategies in one. And in that, to me, that's the ultimate downside protection, because if you underwrite for all 6 and you know that you can get out at different places, then a lot of things have to go wrong, right? A lot of things have to go wrong for you to lose any money or not hit your projections. So I've been doing more land developments, and I've also been going international. That's been one of the things that I've been doing. And when we go international, we don't use any debt. So we eliminate the debt risk. We eliminate that clock or that um, invisible man knocking your door saying, "Hey, my money's due. Come on." But I still do the U.S. assets. Like we've been talking about, there's some deals that you have been we've been onboarding into Homebase, and the U.S. assets are still in our pipeline because we have the infrastructure and the team to tackle them. In the US, I work with the same partners that we've been doing all these commercial deals with. So we understand pretty well each one's needs, and we know how to do all the different aspects from acquisition, asset management, investor relations, and more. And we come from a tech background too. So all of us are, in tune and in sync. And yeah, we do these deals together in the US.
Got it.
Right. Yeah, right now. So it's a lot of different avenues right now in the deal flow, and we're tackling all of those at the moment.
Yeah, no, honestly, quite unique. I feel like most sponsors have a pretty set like asset class. Like maybe they only touch one or two. You look at quite a different. You you have quite a different, viewpoint of different assets that you're investing in. And with that, like, comes really great experience. You're building out your track record for each of those. Do you have a particular asset class you're most excited by right now? Like, are you spending a lot of time on just multifamily? Is self-storage now has a sweet spot in your heart? Like, is there a certain type you like the most?
Yeah. I like the versatility because depending on, and I'll answer the question, but depending on the economic cycle, we may want to stay away from a particular asset class. And we are doing that right now with some, depending on the supply and demand cycles, call it, in certain regions, we may stay away from a whole state that may have been good before. And that's a blanket statement because if we find a salt market with the core fundamentals that are right in a state that we probably blacklisted, we may take it because at the end of the day, everything looks right. We're getting it at a good price. It's within our wheelhouse, and the sub market works out, even if the state doesn't. So we are still open and at the same time closed. But we take a principal approach whenever we tackle a deal. So whatever deal we're tackling is because it passed all of our checklists and all of our bars. Georgie personally is interested a lot in the land plays that I mentioned for the reasons that I mentioned. And I think in the future we're going to double down on this. And the thing with land is because it's development, it's more of a growth oriented play for investors. but we are coming up with a solution to make it also for cash flow. And I'm very excited about what's coming there.
I'm excited to learn more. I'll say development in general has been quite difficult just due to where interest rates are. And so a lot of markets in the zero interest rate period were being overdeveloped. Like Austin, Texas, for example, so much supply came online. But now, because interest rates have been high for quite a while, I feel like supply has actually been, constrained in a lot of markets. And now we're getting to a point where, like, it's easier to buy and then like reposition than it is to develop. And so the people that are able to find the opportunities to develop where you can make those numbers work, it's going to be a much more attractive asset because, there's not new supply coming online as much as there used to be. And so you're one of the few. So if you can make it work, like it's a hot commodity when it comes to the market because everyone wants it. So super cool that you guys are focusing on that and like exploring other ways of like cash flowing it early, but also, having the most growth ended side of it. So appreciate you sharing that, and think very smart to have like a pretty diversified list of assets. So, you're reacting to the market. Investors have different profiles of assets they're looking to invest in, and you can kind of, give that to folks.
Yep.
So, we've talked a lot about, where you're at, what you're focusing on, how do you get to where you are? What are you most excited by? Like, what does the next 5-10 years look like for Georgy? And what does that look like for Equis Capital? You know, is it just growing? Is it doing new types of assets? Is it growing AUM? Or like, yeah, walk me through that.
Yeah. So I'm excited about really improving that 1% daily, weekly, monthly, whenever we can do it, and just continuous improvement overall. Because I think what we have is really good, but the potential outlook is even better. So just honing that in right now and spreading the message out to, there's a lot of us that feel the same way. And once they discover this community that we're building at Equis Capital, where I'm starting to make certain get-togethers for the investors. We already do it where when we acquire the asset, there's an opportunity for us to visit the asset, talk to the operators already there, and just, get together for that 1 or 2 or 3 days. But I'm trying to also do it in a way that all of the different investors from different assets can get together and build that sense of community where they can even go ahead and do their own deals. Because one of the trends that I've seen is people come for the returns, but they stay for the community. And or some people also come for the returns. They get the education because there's a education component when you join a deal. You get monthly newsletters that explain not only what has been done, but why and how. And then people start trying to do their own deals, and the first person that they reach out to is us. And my phone number is always, open for any of our investors. And there's one investor in particular who's buying a property in Puerto Rico right now, and I'm helping him with it. I'm helping him underwrite. I'm recording Loom videos for him because that's the community that we've built. We're not trying to get 10,000 people and not know their names. We get a few people. We know their real desires. We know their spouses. We know if they have kids, dogs, and we work with them on the long term. So if I notice that somebody's not opening the emails, they get that phone call. Hey, I need you to open the emails because that's part of our responsibility, mutual responsibility, and always keeping in touch and understanding. Is there another asset class that you want? And we can go ahead and look it up, look it out.
That's awesome. I don't think I've heard the level of community before on the show that I think you have with your investors. I've definitely heard of people, putting together like mastermind groups and then inviting folks, or like hosting an event in the city like once a month. But it seems like you're building something for your investors to effectively meet. Incredibly relevant given you have folks that are all in tech and like that's your target archetype. So like it's in their interest to also see who else is like, in my community and like, where do you work? How can we potentially, partner together? So that is super, super cool. And do you have, like, out of curiosity, is your investor base like relatively local to a handful of markets, or is it quite global?
Mainly the US, but we have it all across the US.
No, it makes sense. Um, that is super, super cool. I guess for you, like, are you gonna continue like focusing on Equis Capital? Do you see yourself ever going back into tech and like starting another company within the tech space outside of real estate, or like you're like, nope, fully committed to being a real estate entrepreneur, which is awesome. In another life, I was doing this. And I think I told you in another life, like I would be syndicating my own deals because I think that's
Hmm.
super cool and I've learned so much about it.
Yeah, that's a good question. I I am still in the tech space, and that's actually one of the concerns that I get from people when we work on their long term vision. They usually tell me, I don't want to leave tech. And I told them the same thing. Like I have been in the tech space for 20 years now, first as a hobbyist and then as a professional, but it's been 20 years. It's very hard for me to turn that off. But what I changed is I am not anymore within the corporate world. And because of the real estate vehicle, if I do something in tech, I am not dependent on that money or venture capital or salary, right? I'm not depending on that, and which that comes with a set of expectations that sometimes is counterproductive to that freedom that you got in the first place. So the way that I personally do it, and that I help other people do it, is with that salary that you have in tech. How about we create enough cash flow and passive income so that now you have optionality and you don't feel like you have to stay in that job or get that venture capital check. And now you have options. You can go ahead and bootstrap. You can pursue hobbies for a little bit. You can come back to tech if you want to, or you can just work with your other friends that have startups, because your particular skill set that you have honed for the last decade or 2 decades, that's very valuable, more valuable than what money can mean at that moment that a corporation could give you. It can mean helping a friend, or it can be just expressing yourself, self actualization. So in my case, I am there where I have a lot of friends that have their own companies and startups for whatever reasons. And I advise, I consult, I help them build teams. I do the core things that I did at Meta that made me who I was. And I don't have to do all the other little things, you know what I'm talking about, that you didn't really want to do, but because you have to be there 40 hours, you had to do. Or I didn't, or, there's weeks in a company where you're just filling the hours because there's nothing else to do. Well, I don't do that because I have my company here and I help just for the hours that I have to help these people that I chose to work with. That's another one. Sometimes you can't choose to who you work with, but I'm helping them build their companies. Sometimes, and naturally that comes as well. You come in as a partner, but with this modality, now I can choose my own terms. And I think terms is what gives you that fulfillment and happiness. So I am doing a few of those right now, and it doesn't distract me from the mission at Equis Capital. If anything, I think it helps because I'm still exercising both sides of the brain, and a happy Georgie means the deals go, as they should as well.
That's amazing. No, that is so cool. I guess, Georgie, like for folks that are earlier on in their career, or for people that are looking to get into real estate, either, through investing with a sponsor, with you, or, just wanting to do it by themselves? Any advice that you would share with them?
Yeah, I would say if you have capital lying around and you can use that to your advantage. So I like to talk a lot about return on investment. There's a lot of like the return doesn't have to be money and the investment doesn't have to be money. Sometimes you're putting in time to get some type of fulfillment, or you giving away to get fulfillment and get happiness. If you use the money that you have to get the foot in the door, to get close to a particular operator that you want to work with, well, these deals last for years. Now you have access to that person and they're going to take you seriously, and you can start asking questions. You can meet them in person and you can get access to their network. So I more or less did that on my very first deal. And that gave me the confidence to do my next, you know, 18 deals after that. I would suggest doing that, finding an operator that resonates with who you are more than anything, that probably isn't tremendously big, that can give you some time, and work with them one on one, because that can accelerate your path. If for that person it took them 5 years, well, they know a lot more now. It probably can take you 3 or 2 years. So that will be my advice.
And how do you go about like finding a sponsor like that? So you mentioned not being too big. You probably don't want to work with someone who's doing their first deal. So like, what is that sweet spot, at least for you?
Yeah. The sweet spot may be someone that still takes the cost, that doesn't have degrees of people, investor relations person that is talking to you, but that can work. If you ask nicely, you could probably get to the person. But I like to say that a mentor can be anyone with even 6 months ahead of you. They have something to teach you. In this case, you probably want a little bit more than 6 months, but I think that it still remains. And to find them, I mean, what you're doing, Domingo, with this podcast, there's a lot of operators that probably are good candidates for investors to learn from, or even operator to operator. There's an operator that perhaps is doing one type of deals, but is realizing that because of the market conditions, maybe they should be doing something different. So networking in that way is good. But I like that tool of using, that even the minimum investment to get the foot in the door and now have access. It's one of those hacks. I myself, I keep a bank account just for that, to just get into deals with people that, I like and trust, and that I want to establish a relationship with.
That's awesome. No, I think that's incredible advice. I've heard that from other sponsors as well. Being an LP on someone you admire's deal is like the best way to get access to them. So, Georgie, thank you so much for coming on Groundbreakers and sharing your story, and just like sharing, what you're excited by, what you're shooting for, and just more about your background. For anyone interested in learning more about you or Equis Capital, where should they go?
Yes. So they can go on my personal socials. I manage them and they can talk directly to me. So my LinkedIn is just Georgy Marrero. So GeorgyMarrero. My Instagram is Georgy MH. I'm also on Twitter, same handle, on Threads, same handle. And my website has some information about the deals that I've done and more of our investment thesis, and also some free resources like videos on how to underwrite and other things that people in tech may find interesting. And my website is just equis.capital, EQUIS.capital. And as well, if you leave a message there, I read all of them. So you can contact me very easily.
Amazing. And we'll go ahead and link all of that in the show description as well. But thank you again for coming on Groundbreakers, Georgie. And thank you everyone for listening to another episode. We'll be back next week with more stories of founders and investors who are building from the ground up.